Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, May the 24th, 2013. No, I do not want to run that program. Okay, let's just jump into it. This is the daily chart of the Dow futures. We had a pretty, we pushed to new highs closer to the beginning of the week. We were a holiday shortened week. This Monday, the markets are closed. The U.S. markets, so not expecting a lot of activity, but over these kinds of weekends, like one of our traders was mentioning in the trading room here, these are usually the kind of weekends where there's an excuse for some crazy thing to happen. So we'll be keeping our eye on that. I'm going to redraw, I think, what the relevant, we've got some relevant, a relevant channel in play here. Let me just change the color here so that we can see it a little bit better. Gray, does gray look okay? Let's change it to, okay, cyan. Cyan looks good. So let me draw the channel here. I believe this is the channel that's in play here in the Dow futures. And essentially what we've had here was we were testing the top of this channel, which is essentially resistance, and we spiked through it on one day, and then we pulled back. And as you would expect off of this is what I call like a distribution type candle. Some people call it a hanging man candle. Let me just grab the pen here. So this bar here is kind of a bearish candle stick pattern where you have high volume coming in on that candle, and it closes more than 50% off of, let's say, its highs, right? So you've got a push up above the channel. It looks a little bit like a blow off, and then it closes down lower. And then you had a pullback the next day to support, which coincided with this 3-day consolidation breakout. So that was to be expected. Now, what I'm not sure about at this point in time, you had the pullback, but is that the pullback? Essentially, I was expecting a deeper pullback and not, this got bought up right here on Thursday. So you had Wednesday, negative action. You had Thursday, pullback to, close to support, to some, logical support levels. But then it got bought all the way back up to its relevant high. So essentially what you had was this. You had this kind of negative day, and then you had a pullback, but then it closed right in here. So essentially what you did was you just came back into this range. Now I'm referencing these two candles here. So you just came back right into that range, and that was very indecisive. And then you have sort of a hammer happening here on Friday, but you didn't really expand above the highs of Thursday. So at this point in time, if we do push back up, and we do find support here when we push back up, I can't really participate in this. What I'm really looking for is a deeper pullback. That's what I would expect to happen. But because the trend is still intact, the probabilities are probably higher that we're going to come back up and push up higher. But I don't really like this. So what I'm expecting to have happen is a deeper pullback to the bottom of this channel, let's say, or somewhere to 14,800-ish, which was this swing high and was this major breakout area. So if the market goes higher without me, no problem. I don't really care. I don't like this action. I would expect after testing the top of this channel, a deeper pullback, sort of like this scenario back in here at the the middle to end of May. So at this point in time, that's sort of what I'm looking for. I'm looking for the deeper pullback down to this trend line. At that point, I'm not sure if it's actionable because we're pretty long in the trend, but I'm looking for a continuation off of this lower channel. What I'd be looking for is a push in, and then I'd be looking for strength off the bottom of that channel so that my risk is essentially defined. So that's sort of what I'm looking at. I'm not really all that interested in this market. This to me is an indecision point. Even though we pulled back to a logical support level, I'm not looking for any upside in the intermediate term, or in the short term rather, off of this level because I think, we've tested the top of the channel. We really need to come down. Hope that makes sense. It was kind of a long explanation for the fact that I'm looking for a deeper pullback, essentially. Let's take a look at the S&P. S&P, same sort of story here. Let me just get rid of some of these fibs. We sort of pushed up higher here. We're above the respective channel, and we pulled back to the 21 exponential moving average. We found support, but we've tested it 2 days in a row. So that to me is starting to look a little bit, it looks overdone to me. If you look, the MACD is starting to look weak, and it looks like it wants to roll to the downside. So at this point in time, we're at support. The trend is still intact. I just don't like these levels. I'd like to see a deeper correction. Not to say that it's going to happen. So if we look at the breakout, we were looking at a breakout last week from this cup pattern, and we've already, tested the 2618 extension, which is pretty, it's pretty huge. So if I extend this this trend line out, that's sort of what I'd be looking for, somewhere around, you've sort of got this tighter channel happening in here like you do in the Dow. So somewhere down around that channel area is what I'd be looking for, somewhere where it lines up with around 1595-ish, this swing high. That's sort of the breakout area that I'm looking for this market to pull back to in terms of a support level. So I hope I've been clear here. This is sort of the level that I'm looking at a potential pullback to. If it pushes off without me, no problem. I'm not really interested in participating in that because I would consider that sort of a blow off unless we're going to kick off, the beginnings of a brand new bull market, which would mean that we'd have a lot of upside. But I have no way of knowing that at this point in time. So the deeper pullback is really what I'm looking for. So we don't need to spend much time on that. Let's move on to the Nasdaq. So the Nasdaq's the same sort of story. We've had this cut pattern happening. I was looking for a push into the 1272, 1618. We sort of got somewhere in the middle, just above the middle of that range. I consider this move done, and at this point in time, we're at support, but I'm still looking for a deeper pullback in order to look for anything actionable, and that pullback would coincide to around 2858 in the Nasdaq futures, somewhere around these breakout levels. So let's look at the transports. Transport, same story. They've sort of pulled back to their breakout area. They've tested their 1618 of the breakout of this cup pattern from this high to that low, and now they're pulling back to logical support. I've really got nothing on that at this point in time, except for looking for a deeper sort of pullback. You have this sort of trend line in play, and you're at trend line, close to trend line support. So the trend is still higher. Don't fight the trend. But that said, I really don't have much on this here. Let's take a look at the dollar index. So the dollar index has been higher over the last couple of weeks. It's pulled back down to the 20-period exponential moving average, which I would consider support. You've got this sort of double bottom happening here. I think I don't really have a lot in these markets at this point in time. I'm really looking for guidance in all of these markets. I don't really like anything here. I think the dollar index, even though we're at support here, a pull back to this trend line or back to 8250 is probably in order. This is a pullback to the breakout point. It's at support, but I don't really have a heck of a lot to say there. Let's look at the euro and see if that looks a little clearer. The euro's just right back into, we were talking about how there was potential support in and around this area, if memory serves me, because we had completed sort of we had a Darvis squeeze. Let me just flip over to the charts there. Let me look at the euro just to give a better idea. So the euro on the daily chart, this is what I was sort of looking at. We had this Darvis squeeze short, and the target was down around 128.19. Once those targets are hit, you're usually expecting some sort of a bounce. So we had a decent short move, from this breakdown to this full target area. And once we hit that target, I was expecting a bit of a bounce, and that's exactly what happened. We found support down here, and we just pushed right back into $1.30 key resistance. We didn't exceed it, but you can see we tested it on these 2 days, and now we're just below it. So I really have nothing on the euro either. I don't really have a heck of a lot in the euro either. I'm looking for guidance on the euro. Need to see a couple of days develop next week. Now we're in a holiday shortened week, so it'll be interesting to see, Tuesday, Wednesday, I'm going to let that sort of settle out, the U.S. markets, and see what develops from there. Let's take a look at crude oil. Crude oil, I have nothing either. I'm waiting for a breakout above this key resistance, 97, which lines up with this 618 move, is the key resistance. So, we're finding key support down here, and we've got key resistance. It looks like we're building up energy for a move. So I'd be looking for, a break of either of these levels. To me, these look like signs of accumulation, where these bars are being bought up at support around 92. So I'm just going to mark that level there, 92-ish. Seems like pretty decent support right now. You can see where those levels come in the past. So a break above 97 up to 100 or 101 I'd be interested in still. Nothing's changed there. Natural gas. Natural gas looks more bullish than bearish to me. We came down off of from this low to this high. We didn't quite test the 50% retracement, but we broke back up above this trend line. So at this point in time, potentially, if we can get back up above 427, which is the key resistance, then I'd be looking for a test, a move above 427. I'd be looking for a test of 445, 446, and then I'd look to see if we can get something going, some sort of an extension to the high side. So if natural gas were to break above 427, I'd be looking for a move to 456-ish, and if we can get above 456-ish, then I'd be looking for these extension levels, up above 461 to 482-ish. So that's all I have for the natural gas. Let's look at gold. Well, let's look at copper. So to me, copper looks like it's building a bullish pattern, but we're going into a bit of a consolidation. We're overdone on the stochastic. We're testing the zero line on the MACD. So what I'm looking for copper is we broke out of this trend line here, and we've sort of completed a 1-2-3 trend change. For those, that are aware of what a 1-2-3 trend change is, we broke above, we pulled back down, and then we really need to get back up above that swing point. There's your 1-2-3 trend change, and then if we can get above logical resistance, we can get something going to the high side in copper. But to me, it's put in a lower high. It's sort of put in a minor higher high, and it looks like it's set to put in a lower high here. So I'd be looking to see if we're going to find support in this area, and if we're going to push back off and then break through that trend line. So because copper looks strong to me, I think it may be leading the metals for an intermediate short-term move higher. So looking at silver then, silver did sort of the spike low into a support level, and it's just basing. It's building a basing pattern. I'm looking to see if we can push back off and maintain support. I think the major support is in and around here, around 2190, and I believe that was more of a stop run, because silver is a very illiquid market. I believe that was more of a stop run. I'm looking for a pushback into, maybe 2649-ish. And here's a trade. It's not the greatest trade, but I'm back in a small gold trade here. I got back in gold on Friday for a couple of reasons. What I was really looking at, this is sort of a dead zone, but what I'm anticipating, and I may be a little bit early to the trade, but basically this is what I'm looking at. This is what I'm doing. So we've got strength in copper, and I believe we found support here in the gold. So this is sort of a higher low in place here, a higher low, okay, and a sort of sloppy double bottom. And what I'm looking at here is we've got trendline resistance right overhead, but I'm looking to see if we can break back above 1403, right? I got in on Friday. It was a really tight day. I just got in here, and I'm just doing a small option trade 1 month out, and I'm looking for a break of this trend line. I'm looking for a break of 1403, and then I'm looking for us to potentially get into the 1500 to 1525 if we can. So that's sort of the area I'm looking at. I'm looking at a break of 1480 if we can get above there, understanding that 1480 is the major resistance. And then after that, we have a move into, 1500 to 1525 that I'm looking for. Now, having said that, on the downside, we're looking at support at 1317. And if we break this area here on a decisive basis, I will just stop out of the trade. It doesn't matter where we are. I'll just get out of the trade. I'll close it out, and I'll consider that it's not really going to work out. This is sort of a counter trend trade because the trend is really still to the downside here. So this is more of a counter trend trade. I'm looking for this sort of double bottom to hold, a break of this level, and a push into that level. That's essentially what I'm looking for, recognizing that it's not necessarily a high probability trade. We could base here. We could be, just building up energy and basing here, in which case if we don't get anything going, in a week or two, I would just stop out of the trade as well, because my option really wouldn't be worth much. So what I do like about this trade is we had the stochastics roll down below the 20, and now they're rolling back up above the 20. I really like that. I like that. I don't really like, this scenario here. So I'm sort of 50-50 on the trade, but I decided to take a small position to see if we could, get anything going there. So that's all I have for gold. I'm in a small position in gold. That's what I'm looking at. That's what I'm doing. Not the greatest trade, but I'm willing to see what it'll do. So let's take a look then at do we need to cover any other major markets? Let's look at the 30-year bonds. So the 30-year bonds are really sloppy here. We're in a period of what's supposed to be seasonal strength, but we're not really getting a lot of seasonal strength. What we really had was if you look back over the last couple months, we're in a really long and wide congestion area range. We're sort of range bound between, these highs and these lows. So we pulled back from this low to this high to the 618. We extended a little bit below it. Our stochastics are really overdone to the downside. If we can get back up above, let's say, I'd say probably this trend line here, and back up above the 20-period moving average off of this, extension through the 618, and we can get back up above the 618 and above the 50. Perhaps we can get something going back to the high side for a retest of these highs. But at this point in time, I don't really like the bonds to the long side unless and if they do that. So I don't really have much there either. If we don't get through those levels and we fail, then we're probably looking at a retest of 140 and 1430 seconds, which is the low here. So let's see. Let me just flip through a couple of other charts. We looked at the euro, the gold, the silver, the copper. We looked at the dollar index. We looked at the Canadian. We looked at the dollar index. We looked at the euro. Let's take a look at the Forex market, the USDCAD. So this is a market that I'm just keeping an eye on, and I like this sort of wedge pattern happening here. We had from this low to this high, we had a 618 that we held, and then we pushed off above, and we broke this. I would consider this either a symmetrical triangle or a wedge type pattern. So you can see we broke through on the USD-CAD the high here. We broke through this trend line. We basically completed the pattern. We pushed up to 103. 103.697-ish, and we're a little bit negative here. We look like we're going a little bit sideways, but this is the completion of this pattern, and the measure rules for the completion of this pattern could bring us to potentially 105, 105.3, all the way up to potentially 107.6. So I'm keeping an eye on this market and looking to see if we're going to get continuation follow through of this pattern. I think as long as we hold the 21 period exponential moving average or the top of the pattern, I'm still going to remain bullish on this market. Everything sort of seems to be firing on all cylinders. We've got trending indicator in the favor. The stochastics look strong, but they're overdone. And the MACD crossed above the zero line, and it looks positive. So I like the pattern, and I like the potential for it to test some of these levels between 105, let's say, and 107.5. Okay, in the USDCAD. So I like that. So at this point in time, I'm just going to be watching this market and looking to see if we're going to hit some of those levels. That's all I really have for today. We're not going to have a meetup this Sunday, tomorrow. The meetup's been canceled, and we're probably going to lay off the meetups for a little while, enjoy the summer, and get back into it strong, you know, in maybe a month or two, or perhaps even in September. So we're just kind of laying off the meetups for a while there for those who are wondering what's going to go on with the meetups. I think we just need a little break from, you know, the structured meetings that we've been having every month, and looking to enjoy the summer with our families, and a little bit of time off on the weekends where we can get it. And in terms of the CSTA Oakville chapter, we're going to have our meeting next month on, I believe it's the 12th of June, and then we're going to be taking a few months off and getting back in September. So I may sort of line the meetup schedule up along the lines of the CSTA Oakville chapter meeting, in terms of taking the summer off and just relax, you know, have a little bit of fun. And we've been working quite a lot lately, and then you know, looking at, you know, ramping back up there in September-ish. So that's all I really have for today. I hope it helps. Don't forget that the U.S. markets are closed on Monday. And I believe there are some other markets closed. I'm not sure if Europe's closed, but don't, like, you know, expect some lighter volume, and there could be some crazy things happening if you're, you know, looking at the Canadian markets. You know, I just suggest, you know, being cautious, being careful. There won't be a lot of, you know, volume in the markets. So having said that, good trading and good investing, and we'll look forward to seeing you at the next video update, I suppose, or at the next CSTA Oakville chapter meeting. We already have a speaker lined up for that, and the announcement for that will be going out probably next week. So good trading and investing, and we'll see you soon. All the best.